I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So, positive data out of Germany and China has overseas markets on more solid footing, while our futures are up after the roller coaster ride that was the market yesterday after the Fed minutes. How surprising do you think this open is this morning?
How about this? Next time the Fed meets or we have minutes, just tell me to stay home. I think that's what a lot of traders in the office would have liked, because yesterday the market was very random, it was very erratic, where we were basically a little weaker. Fed minutes came out, we pushed to the lows, we went to the highs, and then you didn't see an uptick in the futures during the last 20 minutes as we closed on the dead lows. And then after hours, I think we were another 4 to 5 handles lower. So coming in today, traders probably woke up and were like, oh my goodness, what are these futures doing up 6 to 7 handles above fair value?
All right, so map out these levels for us. What are the ones that we should watch today?
Well, first of all, with yesterday and the Fed minutes, all right, these minutes were from 30 days ago. So they were very hawkish, in my opinion, but they were also hawkish because 30 days ago, we looked like we were about to take out 1,700 on the road to 1,740. So why not be so hawkish and talk about tapering in September or maybe October? If you look at the chart here of the S&P, you will see that right around here on this day, when it looked as if we were about to break above this 1698, that's when the Fed actually met. So right around here, why not be hawkish? You know what? We had a huge move up, 19% or so in the markets, getting a little spoiled. So we deserved some type of corrective process. So you know what? We just had it, okay, or a portion of it. We're down 3% from the highs or so. So down here, if the Fed was meeting, I doubt they would have been as hawkish. But anyway, this is that head and shoulders top, pattern. This was when a lot of people tried to play from the net short. Here, a little bit more neutrals. We're trying to figure out, does this trend line hold that's been in place ever since the November lows? So you want to take a closer look here. This is the way I'm approaching it, okay? I'm coming in, pretty flat-footed, just a few longs. If we start to clear the 50-day and the 1658, perhaps we get some type of oversold bounce, into Labor Day. But if we go negative today and start to take out yesterday's low, all of a sudden here is the 100-day that's right there. Okay, last time we traded below the trend line, came back above it before, crossing this little pivot to then resume the rally. So here we are. I think we're in a little bit of a testy area. So if I were you as a trader, I think it's a tough short right here. This was your spot to be short, but it doesn't mean you need to be all in long. I think you test some levels and we try and figure out, does this trend line really break?
Well, we know that all eyes continue to be on rising rates and the TBTs. So as the TBTs continue to go higher and the market gets scared, how soon do you think we get that 3 handle that you've been talking about?
Well, starting in 2013, before rates started to rise, everyone's been, for years, have been saying rates can't stay this low forever. So it kind of baffles me that even the bond guys, who are supposed to be the smart guys, how could they not be situated, for their clients or whatever, for potential rates rising? Part of our 2013 thesis was rates probably should rise, and if so, TBT would be a good long, TLT a good short, and then as the market confirmed that all year long by following the 21-day moving average, it's been a great vehicle for some of you out there, especially if you have it in the draw. You look here at the TBTs and you'll see, ever since it, started to really get going in May on that jobs report, it's held a 21-day and was buyable every single time it touched it. And maybe a few times it held for a few days, and then it's broken out, and now it's at highs. it's above a lot of levels. I think we were talking north of 80 for 2013. Well, it is north of 80. It does seem like it can continue. And if it were to continue, maybe our equity markets will still suffer. But ultimately, I think last month on CNBC Asia, I said, a 3-handle will be at a theater near you come the first quarter of 2014. It looks like it might be here by Christmas.
Well, all right. Well, how about
Put that
we check
in your stocking.
That's a present for you. All right, let's check in on the various sectors. There are divergences among them right now. Some looking stronger, some looking weaker. The Russell looking the strongest. It was able to bounce back above the 50-day on Tuesday and close above it yesterday.
So I guess we'll go from strongest to weakest, and this one, is a glimmer of hope besides some other stocks holding up well. Russell's considered the growth. It's the breadth is further than like the Dow 30 or the S&P 500. You're talking a lot of stocks in the Russell. So if you look here, you will see that it's above the 50-day moving average, right, which is right here, and well above the 100-day and this trend line. So with that said, here is your relative strength. If this starts to weaken and gets hit with the market, you're going to see some further weakness. And that level right here is somewhere around 101 to 150. If it starts to get stronger and breaks this lower pivot first, maybe that'll be a leading indicator for us. But ultimately, watch this. If this relative strength starts to weaken, I think the overall market will weaken. If it could hang in there, maybe we start to stabilize.
Well, next down on our list, biotech. It has been one of the strongest groups that's helped lead the market this year. The IBB had a nice 2-day bounce that helped it reclaim the 8 and 21-day.
Yeah, and from time to time we talk about the strongest biotech stocks. So if you look at your overall ETF, which is a basket of them, you'll see that this too, relative strength here, okay? This is your 50-day moving average. It's well above it. It's actually at the 8 and 21-day, and here's your 100-day, and this was your prior pivot. So it's still above the May pivot, which that was 1687 in the S&P, and right now we're at 1640. So this is showing you relative strength. So if you're looking for relative strength in the market, the biotech is where it's at.
The banks, meanwhile, starting to trend lower. We have the XLF still getting pressured from its 50-day.
Yes, and yes, we had a small red dog reversal a day or so ago, and then it almost got negated. Certain stocks negated it already, but overall the XLF is not showing that much relative strength. It's pretty much in line with the spiders, where you have this lower pivot. Here was your get out of Dodge, and now it's on a really big trend line that's been intact right by the 100-day. So I would watch this very closely. If the banks or the XLF starts to break this area, we're going to get another round of selling. If it were to start breaking above this lower pivot, to retrace back, then you get that bounce, and then that'll be something that might be tradable. But overall, you could watch these banks for some clues, and just to show one, I guess they had the big mess up, so to speak, just to show you sometimes how a red dog reversal could only be there for a day trade. This is when it tried 2 days ago, made a low, came back above, but then once it broke below, you had to get out. And ultimately, this too has been trending lower, and wait till you start seeing some real stability in these banks. Right now, Bank of America has actually been the strongest one, but overall, this is still above trend and it's hanging in there. So a lot of these stocks and key groups or key sectors are at these inflection points.
Right, but now we're getting into some of the weaker sectors.
Yes.
Among the weakest, we have retail. The RTH still feeling pretty heavy and hanging below the 50-day.
Yeah, and you have a pretty big gap there. And this is something new because retail helped lead this year. So you look here at the RTHs and you will see, look at this head and shoulders top right here. And just so you see how you could see clues, look at the size of this engulfing day right there. That was we're going to resolve this to the downside. So hopefully some of you even got short on that and then got paid on the gap. Now with that said, this gap is still controlling this move. So we talk about if gaps don't get filled, you continue in the direction of that. So at this particular point, we're up a little bit today. If retail starts to go lower and breaks this, you could see a move to here. And just take a quick look at what happened to Target yesterday. That is gross. Like, look at the size of that move through the 200-day. So with that said, if this doesn't fill this gap and reclaim the 200-day soon, you'd have to almost be a little careful as a longer-term investor of Target.
Well, and at the bottom of the barrel, we have the home builders. The XHB did have a strong bounce last Thursday to reclaim its 200-day, but it hasn't gotten any momentum really since.
It's like hanging on by a thread here. The market's made new highs this summer, and this sector didn't because of rising rates, and they say that could, suffocate people looking for mortgage, the housing market, which has had a really nice bounce. So I'm hoping that this group acts a little bit better. But anyway, you look at the chart here of the home builders as an indicator. Here is your high, lower high, lower high, lower high, lower high, and here's your floor support. So if this were to start losing the 200-day, okay, which it hasn't done. Look at the 200-day. This has not lost a 200-day for a long time. So that's how you want to measure if things change, composure-wise. And here it is. This is your key line in the sand. Okay, it has to stay above this 28-28-20 area. Here's 28-64 actually, or 54. If it does hold against above it, then maybe this is just a long consolidation, and it did it through rates rising, and then it would have to get above here. So ultimately, watch these home builders in this lower pivot for some clues.
Well, as we get improved Chinese data, we're seeing some strength out of some Chinese names. We're going to go in the trenches with some of those right after this quick commercial break.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Right now, we're seeing some patterns starting to build in some Chinese internet names. Names like Baidu, which showed relative strength yesterday. We always like to look for relative strength, and Baidu was actually able to close well off its lows yesterday.
Yes, and this one's been acting better. It's gapped up twice in the past 2 months, last time since earnings, and it's something on the go-to list. And you look here at why it's on the go-to list, I'll show you. Okay, first of all, this is when it started acting better, if you remember, when they did that acquisition. Then here was after earnings. And from there, it trended higher, and right now it's starting to consolidate here. So markets pulled in to its 50-day. That's where the 50-day would be for Baidu. It's actually at the 8-day, so showing relative strength. So I would say as long as it holds above 132, you could try and be long this if you're trying to be long some names during this corrective activity. And if we find our footing, you could add above this 137.80 for some type of momentum.
And Sina has been on the move since its big move on July 18th, and this one as well showing relative strength, still above the 21-day. Yes,
and again, I hate to say like these things are strong until they're not, but right now they're still strong. They're not getting dragged down by the market. You look at Sina. I really liked it right around here when it broke out of this multi-month channel, and then it's been trending ever since. So now it's still hovering above the 8-day. Now looking like Baidu, I'd say a little weaker. It's also not as quality. But anyway, with that being said, as long as this holds above 77.80, you could stay with it. If it breaks below it, you could see the 21-day moving average. So overall, this is pretty fair. I like the chart of Baidu better.
How about Yoku? How much do you like this chart? Because yesterday had a nice rally right off the open and was able to register almost 5.3% of gains yesterday.
Well, this one, has pulled back, and this was considered a day one within a week tape. So whenever you see a high volume igniting bar or a day one in a week tape, you want to take a little notice here. So you look at Yoku, a lot of funny names in here. You see that it had a pretty big pullback, broke above this area yesterday. If it could hold the middle end of this range, I do think that there could be another trade here back to fill this gap above 24. Overall, this name is not for the faint of heart, but it's actually, I look at this chart, it's okay, fair. There are only fair charts out there. I don't see many A-list plays.
How about Sohu? It is lagging its peers a little bit, but do you see a pattern here starting to build?
If you were looking to buy a dip, because some people were, sometimes you play momentum when momentum's there, but there hasn't been a lot of momentum in this market because we're in a corrective phase. So if you're looking to buy something in the hole, so to speak, look here at Sohu. You will see, it did have a tremendous move when the market was moving right through here, right through 52, and now it's been consolidating, and it's right on the 50-day. So you want to take a closer look here. It did perk up a little bit yesterday as the market was weaker. So with that being said, if you want to trade it long, in the hole versus 59.50, you could do so, but really for it to get going again, it has to clear, I would say this, what is it, 62.40, for it to be back in the game for momentum. Right now it's just hovering above support, and if you're a guy that buys first support, here's your spot.
All right, time for some quick hits. Let's talk Apple, which did close on lows yesterday, but held above Tuesday's low. So what does that tell you still about the strength and composure of its behavior right now?
It's still acting very well. You know, I've been trying to be a little cute to get that perfect price. I wanted to move down to $498 or $493, and it didn't happen. So, you know, I'm flat Apple right now, which, you know, I don't feel comfortable flat Apple. I like to be involved in it, which we were involved in it for many times during this move. Here was your double bottom. Here's when across this descending little channel here, gapped up, showed commitment. This was when it changed, when it gapped up after earnings. Here's when it crossed this downtrend for an addition. Here's when you took back the 200 days. So now look where it is. So with that said, you want to draw your trusty line right here. That's 490. Okay, here is, you know, your resistance. Not really pulling back much. Look at the market pulling back, and this is hanging in there. So I would say if you're really, really active, you know, stay with it if you're long. You know, and if it were to stay really pent up, it won't get below this, you know, 582. And then if that's the case, people are going to have to probably start chasing if it gets above 507, because then here's that high. Ultimately, though, market stays pressure. You know, you could see a little bit more of a retracement. So I'm watching it pretty closely, you know, because that's what I do with Apple. I watch it closely. And at this point, you know, I'm trying to figure out whether I have to get in up here or I'll be able to get some prices into those moving averages.
All right, Under Armour, 3 up days in a row, closed above its 8-day. Think we'll see a new high in the coming sessions?
It's acting strong in a face where retail is very weak. You know, there are some guys on my desk trading it. You just take a quick look. You know, my rule is I don't like buying after 3 days, but it does look pretty strong. And as long as it were to stay, I guess, above, you know, this area here, you could see a new high move. I just wouldn't chase it today.
All right, for those looking for a potential short, Rackspace Hosting, RAX, what do you think the setup is here?
I think this is still below the 200-day. It's below the moving averages. It just had a bounce, and now it's like barely holding on to support. So for those of you looking for a short, you know, if you trade this name, you know, here it is. If it were to break below this area here, okay, which right now stands around 43.40, you could see more downside. I don't like that it tried to rally and failed right there, and now it's hovering in this lower end of the range. So below this, you can get downside continuation.
Well, you did mention Target missed its earnings expectations. Big surprise there yesterday. What do you think? Is this just an avoid at this point?
I think let it see. You know, I think overall Target's going to be fine. So if you're a dip buyer and you haven't been involved in it, say I want to buy Target, wait for it to at least take back the 200-day. You know, my rule is if a stock breaks below the 200-day and can't reclaim it within 2 to 3 sessions, that means it's a real break and institutions are really selling it. If it reclaims that 200-day quick, that's more of a seller's trap. So if you look here at Target, you will see overall, you know, it's not that far off the highs being 74. It's only about not even $10. But here's a 200-day. So what do you know now? You know, yesterday's low is right here. Okay. If it were to go sideways within this lower range for a little bit and digest it, you know, perhaps you could be a buyer above yesterday's high, which is right around, you know, 66.93, and then see if it fills this gap quick. If it fills this gap quick, then you know that buyers are stepping in. If it stays down here and doesn't fill this gap, then chances are it could head lower. So, you know, I'd watch it pretty close. This is a pretty, you know, strong breakaway gap to the downside, the second one actually.
All right, so with what looks like it will be a surprising open, as we said, with the futures positive this morning, what will you be focusing on as you begin the trading session?
Today's a weird dynamic because you have guys that try to be long. Like I was longer yesterday, probably around 3:15, then I went home because of the sharp decline. Then you do have probably people that pressed the tape into the close, getting short, saying this is an ugly close, I'm getting short. So when you have some individuals short and you have some out of stocks that they wanted, it's you know, it adds some kind of like pressure cooker for the open. So if we open up and within 15 minutes or so they can push us lower, then people who want to get long exposure are going to have to buy. People who are caught short that are trying to trade out of it might have to cover, and that's what creates a gap and go. So I'm not saying that's going to happen, but that could happen if we don't have a pull-in the first, I would say, 15 to 30 minutes. So with that said, you take a quick look at the spiders, and you'll see here that this, just like the SPX, you know, is not looking great. It's in no man's land, above the 100-day, below the 50-day. I would think that shorts or shorter-term shorts aren't going to get worried unless we really take back this 166, 166.20. So here's your inside range. If all of a sudden we start to fail and we start breaking below yesterday's low, then I would like to see how we really handle this 100-day, you know, which, you know, and this trend line, which you could see, you know, has been intact for a long period of time, going all the way back to, you know, November. So we're getting into a key area. This area right here, to me, is still a little bit of no man's land.
All right, that's your morning call for this Thursday. Happy trading. Have a great day.